All right. Uh, Hello, everyone. Welcome to today's expert talk, the first of many events we have in line for the 2024-25 season of Embedathon. I'm Aditya Kasal, the Circuits and Systems Secretary of IEEE-NITK, and joining me is my fellow secretary, Mayank Singh. Whether you're joining us as a participant, enthusiast, or just curious about the world of embedded systems, we're thrilled to have you here. So, more about Embedathon. Embedathon is a hackathon that challenges participants to push the limits of innovation in embedded systems, encryption, networking, and hardware. With a focus on exploring the vast potential of technology beyond sensor based solutions, Embedathon encourages fresh perspectives and bold, out of the box ideas to tackle real world challenges. Today's session is designed to inspire, inform, and ignite new ideas. Today's speaker is Mr. Vishwas Mysore, the Director Solutioning at Bureau India. He will be talking about cryptocurrency and fraud risk, focusing on the hardware and software solutions. Cryptocurrency today is both an asset and payment instrument, and while there are multiple unsettled debates about their benefits and sustainability, the problems they pose in terms of fraud in general and money laundering in particular are relevant for businesses and economies globally. We need both software and hardware solutions to mitigate fraud risk, and while there are some solutions already available, fighting fraud is an ongoing battle with artillery on both sides, comprising mostly of technological advances. With a wealth of experience and groundbreaking contributions, Vishwas is here to share insights that will help you approach your projects with fresh perspectives and innovative strategies. So, more about Vishwas. Vishwas started out as an information technology engineer and over the years navigated the analytics, fintech, and regtech universities while acquiring formal qualification in management and law. Born and raised in Bangalore, he has also raised the opportunity of living. He also had the opportunity of living and working in Mumbai, Delhi, Pune, and Pondicherry, while also traveling to Southeast Asia and Middle East Asia on business. Vishwas believes in continuous learning and would like to remain a student for life. Okay, so before we get started, here are a few housekeeping notes. If you have questions during the talk, please type them into the chat or the please type them into the chat. We'll address as many of them as possible during the question and answer session at the end. And this session is also being recorded and will be available for replay after the event. Without further ado, let's dive in. Please join me in welcoming Vishwas to the virtual stage.
Thank you, Aditya. Let me just bring my screen up. I hope you're able to hear me well.
Yeah,
Sure. Please let me know once my presentation is visible.
yeah, it's visible.
All right. Thank you firstly for the opportunity to share whatever little I know. There is a lot about cryptocurrency and fraud risk that is still evolving. Uh, Given that the event itself is Embedathon, I would like to leave behind some aspects of embedded systems and hardware that students can look to work on. But given that cryptocurrency is also a lot of software with its foundations in algorithmic mining, there will be, of course, a lot of software interventions that we are aware of. And at the same time, I would like to lay the stage out, introducing how crypto and currency came to be together. And that will be the beginning, right? Now, just as a backdrop, we all do know about cryptography, blockchain, and a recent incident that is completely unrelated to cryptocurrency is something that caught my attention. HDFC Life, an insurance company, faced data breach. So their customers' personal data, including PAN number or tax numbers, as well as name and phone numbers, were breached by a hacker. And as evidence, he used about 100 records of customer data to communicate with the company. and asked for ransom. Right now, how is this event related to cryptocurrency? If we just look at uh, what happened subsequent to the breach and the hack, the insurance company went after Meta Platforms, which is Facebook, as we all know. And apart from Facebook, as well as WhatsApp, as well as Telegram, what happened is the hacker made ransom communications, right? This is a court record document subsequent to the hack. So HDFC Life went ahead and sued Meta Platforms. And if you see this small text, which is where the cryptocurrency element comes into the discussion, the hacker communicated using communication platforms such as Telegram, WhatsApp, phone numbers, as well as emails. And the ransom that was sought was about 1,800 Ethereum virtual coins, which is cryptocurrency, equivalent to 55 crore rupees. Now, as students, you may appreciate that 55 crore rupees is perhaps seed funding or Series A funding for several startups. I'm sure many of you are interested in starting up on your own, and this is definitely not a small sum. Now, the element to take away from this is what is it that gives this ease and convenience as cryptocurrency for a hacker to make a ransom call to be paid in. And that sets the backdrop for our discussion, which is uh, what is cryptocurrency? Is it meant to be a currency, as in this case, instead of asking for cash to be dropped off at a particular secret location, or is it an asset whose value, like any other instrument of investment or asset class, keeps changing with time? So this is the backdrop for the discussion. And how is it relevant to fraud? We just saw that there was a fraudster, there was a data breach, asked to be paid in cryptocurrency instead of cash, which is the usual expected mode of payment. Now, taking a step back from this particular recent episode, there is a huge history to cryptocurrency. Now, if you look at cryptography, there is an element of cipher or text that needs to be deciphered. So, if you look at the historical foundations of cryptocurrency or cryptography, what you are seeing is a 332 BC clay tablet, and the text that is written on this, if you read from right to left, is in fact Alexander the Great, right? So you have the letters A starting from the right, represented by birds and animals, which was more convenient to understand back then in 332 BC. And this is an exhibit which is now found at the Louvre Museum. But even as a mode of communication, cryptography kept evolving. So again, with the 3rd century example, what you are seeing is a wooden cylindrical log on which there is wound a leather tape with some text. Now, if we look at cryptographic communication, there needs to be a decipher or a key. But in this case, it is something as simple as this. And this instrument is called a sightail or a dispatch scroll. So it's a physical instrument that is still passed on by hand, transported and hand delivered, perhaps still in the 3rd century BC. And then the example of how to uncover or decipher this, if you look at the text box below, is reading from left to right, column wise, right? They don't make any sense. They are wound column wise on the rod, but if you then take into account the spaces, the message reads, I am hurt very badly, help. Right. So I hope you're able to break those spaces or visualize those spaces. And this is the communication that was sent on a dispatch scroll, which is called the sightail, back in the 3rd century BC, even before we thought of cryptographic currency or cryptographic communication in the modern era. Now, cryptography is something that is fairly well understood, leave alone clay tablets. There is also encryption that we use today in information technology. Most software very easily uses encryption and decryption. But keeping that aside, how is this even related to currency, right? Now, if you look at how currency evolved, uh, from the beginning of time, of course, there were cowrie shells and there were precious metals that was used as a medium of payment or exchange for trade and commerce. But soon enough, we had what we call as commodity money. So every country or every nation used to have a reserve currency, which was proportionated with gold and precious metals kept aside and not used by the government, and clearly benchmarked for any additional currency that they would issue. But in 1971, President Nixon is blamed for many things, but also doing away with what is called as commodity money and going in for what is now called as fiat money. So, fiat money is the money that we all use across nations. We should thank President Nixon for expediting this. Of course, America was not the first country to use fiat money, but what happened is delinking the link between dollar and gold. So every currency after this, many nations followed up with delinking of the currency with precious metals that they used to do earlier. And this is popularly called as the Nixon shock. And this is where perhaps the foundations for fiat money or currency to be completely delinked from any metal or any crypto key as well, for example. The foundations were laid perhaps in 1971, but there are issues with the currency as well as cryptocurrency. So uh, there was the Nixon shock in 1971. There have been several economic cycles post 1971, including in 2008, when Lehman Brothers filed for bankruptcy and there was a global economic crisis. That laid the genesis for Bitcoin to be founded in about January or March 2009. Lehman filed for bankruptcy in 2008 in September. There were multiple such failures on the economy side all through 2008, including starting from Bear Stearns in May 2008. But there was huge widespread disillusionment with currency, as we call, as well as the larger banking system. So Bitcoin is a company that was started in 2009, and it was, in fact, against what we call as fractional reserve banking, right? And what you see on your screen is the genesis block of Bitcoin. And what it translates to, or what it can be interpreted, is if you see the text on the right within the black box, the text actually reads it's a protest note against reserve currency. So it says it points to a Times newspaper headline about the bailout of banks. So therefore, it is some kind of a troll or a comment on the failure of the fractional reserve banking. So this is the genesis of Bitcoin, which is the world's first cryptocurrency coin. This is the raw hex version. You will be able to find this on the internet. There is a concept of a genesis block. In every blockchain, there is a genesis block, and this is the raw hex version of the Bitcoin genesis block. Now, coming to what should be the ideal elements of currency, right? And this was a screenshot from this morning from Forbes, which is a popular platform to look at prices of commodities, stocks, and now, funnily enough, not just currency, but also cryptocurrency. So if you look at the top 5 currencies, you can see within an hour, there is volatility, right? So apart from the price, so right next to the price, you will see 1 hour volatility or movement, 24 hour, 7 days. And there's also, funnily enough, the concept of market capitalization of currency. Now you have probably heard of market capitalization of companies. So when they are found, they issue a certain number of shares and they start doing business and start booking profits, or even without profits, with calculated or projected profits, the companies are valued higher than the total amount of shares issued. But how would you then do that for currencies? Should that be done for a currency is a question. And the volatility or movement of the currency aspect to the US dollar, for example, is something that is you're seeing right now on the screen. And there is, of course, a huge amount of variation even within an hour or 24 hours. Right? Putting that into perspective on Bitcoins, so if you look at how the Bitcoin itself has moved from 2009 to 2024, again this morning, it has gone all the way up to $100,000. Of course, the recent spike is after the November 2024 elections have been announced on the hope of wider encouragement for cryptocurrencies with Trump coming back to power. But as you will see, there has been a near zero from the beginning of time to $100,000. Now, in 14 years, should a currency vary or fluctuate so widely? There have been debates. There have been debates about whether to look at it as an investment instrument, uh, as also a currency. We will come back and talk about that, but this is just for us to consume in terms of what has been the movement in valuation of the world's first Bitcoin, as well as the most popular cryptocurrency coin. Now, therefore, we will now put into perspective the ideal aspects or the key characteristics that one would expect from any currency, which is a payment instrument or an instrument for trade and commerce. Firstly, it should be durable, right? So, of course, banknotes are not durable, but they could easily get replaced with a replacement note. Yes, they should also be a medium of exchange. So if I were to go across to a shop and buy a cup of coffee, I should be able to pay a few notes and then buy my cup of coffee. And there should also be uniformity. So if I in my wallet carry a few banknotes, uh, they should also be a similar set of notes of various denominations that the seller should have in order for us to be able to conveniently transact. And most importantly, it should also be a measure of value. So a banknote or a currency is not only meant for buying, but also for wealth accumulation, right? So I will always be able to say how rich I am or how much potentially I will be able to buy. And therefore, that's a measure of value. We'll come back and talk about measure of value in a bit. It should also be divisible. So this is the denominations we are talking about. Several 5 rupee notes or 10 rupee notes make 100 rupees, for example. It should be a store of value, and it should be in limited supply. So not everybody should be able to print additional currency, for example, or make additional currency. This is also applicable in cryptocurrency. There is a huge amount of investment that needs to be done in order to mine new currencies, and that is the whole foundation of a cryptocurrency as well. It should also be recognizable. With cryptocurrency, the context is also that there are several memes which perhaps make it easy to recognize and also have some of factor of entertainment while at it. They should be portable. There are certain limitations around portability of cryptocurrency, but largely there are crypto exchanges. It should also be acceptable. Now, there are challenges about acceptability in India. For example, the legal position in India is it is allowed to be an instrument for investment. It is a virtual digital asset, but as such, it is not legal tender. Therefore, it cannot be accepted for payments. And cryptocurrency is also a unit of account. There are denominations of bitcoins. So there is a one bitcoin, for example. It is not further divisible, and then it's also meant to be a standard of deferred payment. Now the challenge of cryptocurrency being a deferred payment is uh, a cryptocurrency such as a Bitcoin could be valued at $100,000 as of this morning. But you should remember that only a few months ago or a few years ago, it was valued at less than half in terms of dollars. So then, if it becomes a standard of deferred payment, there are certainly some challenges of using it for that particular purpose. Now, be that as it may, we'll quickly look into the specific aspect of measure of value for cryptocurrency. Now, in this particular instance, we spoke about how it should be a convenient way for deferred payment. But what happened with the Squid Game token in particular, if we to look at that particular example, Most of us may be familiar with Squid Game, which is a Netflix series. And in 2021, there were a set of unnamed founders who launched the Squid Game token. And what we see as one of the scam modus operandi, there was a pump and dump, which means, let me just move the box to the side. Yes. So in December 2024, you see it is at zero. But if you just look at all time, it dropped from a high to this is still today. So let me just go to all time here. Yeah. So you can see that it was at its peak around November 2021 or January. Yeah, this is first November 2021, valued at $38. One Squid token is $38. And within a day, it's fallen to zero. So you can see it's 0.09 within a day or a couple of days. So this particular example is something that is set out as a bad example for cryptocurrencies. Not all cryptocurrencies are to be dismissed. Let me make that very clear. But at the same time, one should be very wary of using them for various purposes, such as a currency, or using them as a measure of value, because the value could be quickly changing. It could be changing for the better or for the worse, as in the case of the Squid token that we just saw. Now, we've spent a few minutes so far talking about crypto, cryptography, currency, cryptocurrency, but how is it related to fraud? Even if we forget for a moment the HDFC life insurance breach and ransom call to be paid in Ethereum, how is cryptocurrency and fraud, or how are they taken together in the same breath today? If it's a question, we need to look at what are the typical lookout factors for fraud in a cryptocurrency conversation. One must be very wary of any guaranteed returns, and this is in fact applicable for any investment instrument. There are quite a few instruments in the traditional parlance which are also guaranteed returns. There are regulators such as the RBI and SEBI which frequently monitor any promise of guaranteed returns. So the question to ask is, even if we keep cryptocurrency aside, can any financial instrument or investment guarantee returns? 10%, 12%, whatever that is. So that is one question, one lookout factor. I hope the cryptocurrency you're looking to invest in doesn't guarantee this. And if it does, then you know what to do. But at the same time, there are foundations for every currency. Like, for example, the rupee, the dollar, they have a basis, they have monetary and economic basis. Likewise, cryptocurrencies, each of them have a white paper, which is the foundational element of the currency. So, as a student of economics or a student of technology, one may be interested in finding out what is the basis for this particular cryptocurrency. If a particular currency does not have a crypto white paper, or on going through the crypto white paper, you're reasonably assured that the foundations are not strong, then it does not make sense to invest in that particular cryptocurrency. Similarly, moving on, if you look at, has there been excessive marketing or hype or frenzy about a particular cryptocurrency? A lot of meme coins do have excessive frenzy, and anything that is riding on a popular idea or a concept, such as the one that we saw with the Squid Game token, is something that one needs to be wary of. So, uh, the question there to ask is, how can a currency or investment asset class be so volatile such as to lose its entire value in a day? Does the currency have backing by any named team members, or does it have completely anonymous team members? Sometimes there may be named team members who also have a lower trust value, And that is also one of the factors to look out for in any investment decision into cryptocurrency. But at the heart of this entire debate is, firstly, is a cryptocurrency uh, primarily meant for payments, or is it positioned as an investment instrument? Now, as with any other scams, if there is any online interaction that promises free money or free cryptocurrency, one should be again wary of it, because there is no free money indeed. Just drilling down into the details of the fraud world within the cryptocurrency, the typical modus operandi or the steps that are followed are one of these, right? So you do have fake apps and websites that very closely resemble the original exchange or the original app and website. So please look out for that. There could be several indicators, such as the Android or iOS apps, who has published the app in the first place, or who owns the particular domain name. In India, we very commonly see fake crypto trading platforms. They have uh, firstly dubious websites or domain names which do not have any connection with the platform name, for example, and also perhaps very closely resemble popular platforms. So there could be several versions of the crypto wallets that are fake, and the common thread across all of these are they all promise very high initial returns. So this is one very popular, commonly seen modus operandi. Similarly, there is also phishing scams, and now phishing scams are not very specific to cryptocurrency alone. You also have phishing scams which dress themselves like e-commerce platforms or net banking websites, and then get sent to you on email or WhatsApp or SMS. And on clicking and logging in with your credentials, the typical action is capture of any keyword phrase or prompts, forgotten password prompts, for example, and then collect that to log into the actual platform. This also happens very much in a similar manner with cryptocurrency platforms as well. So phishing is again very common across phishing, as well as fake apps and websites are common to both crypto and traditional currency. What is specific to crypto is, in fact, pump and dump schemes. We saw the Squid Game coin example. What is also common is fake celebrity endorsements combined with fake apps and websites. So all of a sudden, we will see deep fake celebrity endorsements and speaking for or watching for a particular cryptocurrency or a particular crypto exchange, and they are in most cases linked to the fake apps or websites that we spoke about earlier. And then again, there is always an element of human greed, which is giveaway scams. So there are people that will always line up for any free money or free cryptocurrency. And this is again something that is leveraged by the fraudsters in the context of crypto frauds. We have spoken about cryptocurrency and frauds and their connections, and these are still at an individual level, right? So whatever we've spoken about so far are how does one person as an individual get defrauded in the context of cryptocurrency. But over a period of time, what also happened is crypto platforms evolved as fraud havens. And if we just look at this in more detail, uh, in 2018, for the first time, the Office of Foreign Assets and Foreign Assets Control of the US, they maintain a list called the SDN list, or the Specially Designated Nationals and Block Persons list. So in 2018, for the first time, they designated cryptocurrency addresses. Now, addresses in the context of cryptocurrency are like your UPI IDs, right? So you will have an address in which you would like to collect money, for example. For the first time in 2018, the OFAC listed two crypto addresses in the sanctioned list. And that was the first time a sanction of a crypto address was made, or a cryptocurrency was made as such. And over a period of time, very quickly, starting from 2018 up to 2019 and 2020, the number of crypto addresses per such designation, not the total number of such designations, but number of crypto addresses per such designation quickly shot up from 2 to then 4 and 9 in 2020. And by the end of 2021, each such designation started having about 30 plus, and in some cases, over 100 crypto addresses. At which point in time, it became unmanageable for the OFAC, which is a regulator in the US, to only designate crypto addresses. Basically, you can think of them as account numbers, right? Individual bank account numbers. And then they started designating the entity itself, which is a crypto exchange or an entire crypto service, as a designated entity. So, in the context of our conventional banking world, you could think of this as, instead of listing down a few bank account holders or customers as bad actors, they started listing the entire bank as a bad bank, for example, right? So you see that over a period of time between 2018 and 2022, what started as crypto addresses being blacklisted or listed as SDN, it evolved to the entire service itself becoming a specially designated blocked person list. Now, what does this mean, right? Now, crypto is not all bad. There are good exchanges. There are exchanges which regulate the users coming in. They only let in trustworthy users. They only allow legitimate transactions. But when you see something of this sort happening, there is a breach of trust or a lack of trust on the entire ecosystem. So the entire crypto service goes down overnight. All the users of that particular platform, they are locked. All their investments are locked, and there is a uh, you know overnight reduction of trust on the entire ecosystem. So the risk factor for even instrument of investment in crypto becomes very high over these years. Now, what does this mean? uh, there are platforms which are systematically encouraging fraud, and we saw the US sanctions, and we will pick only three particular examples of what happened because of the sanctions, right? So when a particular sanction is made on on an entire service, there are three examples, which is Hydra Marketplace, Tornado Cash, and Garantex. You can see these charts for splits of 0 to minus 30, minus 60 on each box or each chart towards the left. So 60 days before the sanction, what happened, and what happened after the sanction is on the vertical split 0 or towards the right. And you have such charts for each of these platforms or services: Hydra Marketplace, Tornado Cash, and Garantex. And you will see that it is not uh, a common pattern. So in the case of Hydra Marketplace, the total daily value received, which is basically the total amount transacted on that platform, fell flat to 0 immediately after the sanction. In the case of Tornado Cash, it came down, but after a bit picked up, and over a period of time, it came down to 0. But in the case of Garantex, which is the rightmost chart, you saw that in fact it came down a bit temporarily, but in fact increased after a period of time. So within a 60-day period, the amount of transaction that was being carried out on the platform was in fact several multiples of what it was about 30 days prior to the sanction. Now, how do we put this into context, and why is it even relevant from a crypto platform perspective? Let us delve a bit deeper into what these platforms are, right? So, for example, Hydra Marketplace, if many of you perhaps are already familiar with the darknet, Hydra Marketplace is a darknet market, but it's also used for money laundering. Garantex, which is the rightmost box, is in fact used very commonly for money laundering. And Tornado Cash is in fact a mixer. You can think of it as a foreign exchange, perhaps in the context of real world currencies. So you could bring in X dollar and take out Y rupees or Y dirhams or yen, for example. So this was also a money laundering platform, and this is not us interpreting them as money laundering platforms, but OFAC sanctions in their reason for sanction, mentioning why they were particularly brought down. Going further into some of these platforms and why crypto as a currency or an ecosystem came under question is look at Hydra, the marketplace, right? We know it's a darknet marketplace, and we also perhaps understand at some level why some things need to be traded on the darknet. So all of these are prohibited substances. These are drugs, and of course they cannot be bought on Amazon or Flipkart, and therefore these kind of marketplaces exist on the darknet for illicit or illegal or banned substances to be traded. Now, obviously, this is a problem for regulators. What about Tornado, the cash mixer? If you look up the website of the Tornado cash mixer, this is an image from there. It comes across as very clean. In fact, the user sends funds to the Tornado cash mixer. Think of them as a foreign exchange setup. And then you receive some kind of, or you could think of this as a foreign exchange prepaid instrument, for example, right? So you receive something back, which is the cryptographic note. What the mixer itself does is generates a cryptographic note and then sends it to the user as a receipt. So the user who is the recipient, he receives this cryptographic note and quote unquote receives clean funds from the mixer. What we mean by clean is in the context of crypto, there are transaction charges, which are called as gas charges. So these gas charges are in fact already paid by the sender to so that the recipient's address is not affected by the gas charges, and they receive what is called as verified or authenticated monies or cryptocurrencies. So this is what Tornado claims to work like. But we have probably seen some of this, if you remember the movies from the 1980s, including from Bollywood. Is very familiar and is very similar to what you will see, which is the Hawala system, right? And some scale of Hawala transactions happen till this date. And this is again an illustration of an international Hawala transaction, but this also happens within the same currency, for example. So the sender pays in a particular currency to a Hawala dar, and this Havaladar A has connections with another Havaladar B in a different location. Between them, they will keep settling the accounts periodically, but the Havaladar B will be able to pay the recipient or the beneficiary in a particular different location or a different currency. And what is common between these two is also the famous broken 10 rupee note, which has a number of the currency written on either halves. So one needs to present that particular broken currency note, and that is your cryptographic note equivalent on the cryptocurrency. So there is a very striking element of money laundering that is common between Hawala transactions and crypto platforms to this extent. And to just substantiate that, if you see the bottom text, in August 2022, Chainalysis, which is a platform that regularly writes about the blockchain industry, wrote that Tornado Cash, until just August that year, had been used to launder funds from every hack that was conducted by North Korean linked hackers. And this is obviously a huge amount of concern, right? So obviously it appears that North Korean linked hackers use it like their home bank. Perhaps many of these hackers are invested in Tornado Cash or probably founded it together. We are making guesses here, but the link is something that is for us to be wary about. So if you look at all of this, right? So we looked at the cryptocurrency itself, how it came to be. It sees its origins in a financial crisis. It starts out as a protest against fiat currency, fiat money. We also see a huge amount of individual fraud as well as platform fraud, and the fraud happening at a national scale, very easily enabling money laundering. And all of this troubles legitimate crypto exchanges. There are legitimate crypto exchanges which would like to prevent fraud. And what is it that they need to do in order to make sure that the trust in the crypto ecosystem is intact? And they can indeed, at some point in time in the future, distant future, if not the near, enable transactions just the same way we do with what we call as real money or uh, conventional currency. So, what crypto exchanges have been trying to fight, have been trying to do to fight fraud is firstly onboard only trustworthy users, and these are very common to getting new accounts opened by customers in banks. So it's know your customers, KYC, on an ongoing basis. Also prevent phishing. Like, for example, you will see many messages from your banks today saying, please be careful, don't click on any links that you don't know about payments. So, likewise, prevent phishing, fake apps, and websites. This is to protect the users of the platform. They also need to be keeping the interest of the regulators as well as the overall economy in mind. And what that means is they need to be compliant so as to not allow any money laundering or illicit trade and commerce. No country today would want to encourage their citizens indulging in illicit trade, illegitimate trade, such as the one in the Hydra marketplace that we saw. So if cryptocurrency is going to make it easy for me to buy drugs, then obviously the legal setup of the country is failing. So it is in the interest of the crypto exchange to make sure that such instances do not happen, and crypto is not indeed used for any illegal transactions or darknet marketplaces, for example. Right. At the same time, they also need to make sure that someone who's interested in withdrawing a cryptocurrency or converting it into real money, such as dollars or rupees, should be allowed to do it without having to wait too much or without having to go through very onerous uh, verification or re-verification, for example. Right. If I am a trustworthy user, I invested in cryptocurrency, and if I for some reason need the money, I need to be able to cash it out into dollars or rupees without too much friction. And that is the challenge that the crypto exchange needs to fight for. At the same time, some of these exchanges themselves have suffered from breaches. So this is very similar to a bank break, such as the one that you remember perhaps from Money Heist, or uh, an entire bank facing a cyber attack and all of the customer money is being stolen. Now, very similar attacks have been seen on entire crypto platforms or crypto exchanges, and obviously the crypto exchanges will like to prevent this from happening. Now, all of this is fraud, and a very quick set of interventions that we at Bureau ID have been doing to fight fraud, not just on crypto. Of course, crypto is one small aspect of the larger online trade, whether it comes to gaming, digital commerce, or banking. We see that there are fraud patterns and fraud uh, modus operandi groups that need to be fought for across the stage. So we saw about how at the account opening or the customer onboarding for a crypto platform, it's called as account opening. You need to protect the customer. Only good actors need to be let in. At the same time, if I am logging in, you should make sure that it is indeed me who is logging in and not a fraudster who managed to get my credentials. Likewise, from onboarding to transaction, there is several amount of fraud attempts that keep happening, and any solution that is able to look at all of these different aspects to preventing fraud is something that is going to be effective across industries and not just crypto. So a combination of several solutions, which is, let's say, device intelligence. Now, if I look at your mobile device, are there patterns of fraud that can be detected? So if you are transacting from an emulated smartphone, phone that has been stolen and there has been some kind of factory reset, or you just managed to steal a colleague's or a friend's phone and then you are now making some kind of illegal transaction. So that will be on the device. Similarly, you could be sitting in Pakistan or any other country and then making a transaction in a different country, right? So, are there network checks or location checks that can be done? Are you a bad actor in the first place, right? Are you a fraudster? Are you a scamster? Are you on a blacklist such as the OFAC blacklist? All of these different checks are something that the industry is using to fight fraud within crypto platforms as well as in the larger transaction space. And interventions such as stolen identity or account takeover or renting an account, as we have come to see, a lot of individuals are happy renting their bank account for bringing in scam or black money. This is permitted kind of money laundering that is happening, individuals not being fully aware, and this is what we call as mule accounts. All of this is something that across the entire life cycle, individuals who are not aware, they legitimately opened a crypto platform account, started investing or trading, and then someone else wanted to start using their account for illicit trade, making illicit purchases, or using scam money being put into the account for a temporary period and then cashed out. So all of this is something that we see across markets, and not just bureau, but there are a bunch of companies that are fighting fraud across the entire life cycle to increase the trust in the overall system, be it banking, be it crypto platforms. Right. The takeaway use cases, and all of this is from a software perspective, the solutions that serve various use cases in the context of fraud within the crypto universe, as well as banking or finance and payments and investments. The ones in red boxes are the relevant use cases for cryptocurrency. So somebody is taking over my account or my device, that is a problem. Somebody is using my account for money laundering, that is also a problem. Money mules is another name for using my account. They're using my account as a mule, for example, for making illegal transactions or bringing in scam money. At the same time, somebody booked into my account and made a transaction that I would not. So that's a transaction risk. Or somebody stole my ID and then opened an account in my name, right? So that is synthetic or stolen ID. I could be a fraudster with an intention to commit fraud, getting onboarded into a platform, and that would be a problem for the platform. So that's onboarding fraud. Now, all of these are uh, problems that are being solved for by the industry using software interventions. I will now quickly move to a close in terms of what is it that is perhaps a takeaway for students who are interested in embedded systems as an opportunity in the context of cryptocurrency. Is not very widely known that hardware wallets of cryptocurrency have been around since 2014. This is a screen grab from Amazon from this evening. Even within India, you can buy any of these hardware or what we call as cold storage wallets for storing cryptocurrencies, and they are compatible across different cryptocurrencies. But one may ask, how do you really store Bitcoin or cryptocurrency in a hardware device? What happens is, of course, your money is still in cryptos, in software, uh, but the private keys are stored within these devices, which are offline, right? So preventing fraud through hardware wallets or crypto wallets, how does it work? A lot of individuals are susceptible to risk, like we spoke about so far, which is, the crypto exchanges itself or the wallet software is targeted by hackers to steal bitcoins. Entire crypto exchanges have had data breaches and money stolen, including in India. If you've been reading the news, WazirX, for example, had a data breach. And to beat this, what crypto wallets or hardware cold wallets do is they allow you to keep private keys out of reach of the hackers, right? The keys themselves are stored or generated on a device that is offline. So, how does that happen? It could be in the form of a paper printout of the keys that we're talking about, or the device itself generates these keys. So if you are at the time of transaction looking for a key, you will be then able to use this paper printout or the key that is generated from the hardware device. That's how the hardware or cold wallets work. Uh, a set of examples is very similar to QR code UPI payments that we are all familiar with. On the top left, you see a Bitcoin address that could be shared in the form of a QR code. And on the right, you see a secret private key, which is also shareable or storable as a QR code. Now, this is one mechanism. Uh, on the bottom, you see one of the oldest crypto hardware wallets, which generates a key instead of the QR code secret key. Now, this device stores the key. Now, these are perhaps opportunities for students of embedded systems to work on. There are a set of challenges within the cold wallets, as we know today. For example, these devices that you see on the screen, they cost anywhere from $100 to $300. They have other challenges such as durability and also other use cases such as combining these devices with other devices that we carry. It could be the smartphone itself, it could be an automobile, or any such convenience, including, let's say, a smartwatch or a smart ring, for example. Now, these are areas perhaps that as students of embedded systems, one may be interested in looking at within the crypto context. With that, I'll complete my discussion. I don't know if it was entirely useful. There could be quite a few questions I'm happy to answer.
Yeah, thank you, Vishwas, for sharing such valuable insights and sparking ideas for all of us at Embedathon. Your expertise and perspectives have given us a lot to think about as we dive deeper into our hackathon's challenges. And to everyone watching, remember that this hackathon is all about innovation, collaboration, and creativity. Take what you've learned here today and use it to push boundaries and create solutions. So now we'll open up the stage for questions. And if you have any questions or we want to revisit today's talk, the recording will be available soon. So, yeah, please chime in if you want to ask any doubts to our speaker.
I see one question, which is if private keys are locally generated on the wallet, how does the server know it's correct? Uh, in fact, there are key value pairs that are already applicable with every blockchain or with every piece of currency. So it's regardless of the mechanism of storage, whether it's on a paper printout as a QR code that you saw, or the keys that are otherwise more commonly stored in one's own account, for example. So if I have a Bitcoin account, for every currency, I have a set of every currency unit, I have a set of private keys which are also stored online. It's just that now these keys are being stored on the wallet instead of being online and vulnerable to being stolen.
So I hope the speaker was able to clarify your doubt. And if there are any more questions, please go ahead.
Another question from Ash is, how does a user make sure the footprint is completely erased once we transfer it? Now, this is one of the bothering questions about crypto platforms itself, that there is, while there is a mechanism to authenticate uh, the validity of the coin or currency, there is complete anonymity about the transaction. So, to that extent, it is very similar to cash because you cannot trace it back. Right, and then going on to Rudra's question, can you please explain again in why third case the volume didn't fall back to zero? Yes, so okay, a bit of context there. Garantex in that example is a Russian entity, and uh, in fact, after the OFAC sanction, Garantex came out on Twitter and said, "No, we are not going to be affected by the sanctions because they are not applicable or are going to be imposed in Russia." So that explains why the volumes did not fall back and in fact went up.
Yeah, are there any more questions you would like to ask?
Are there backup mechanisms that can be used in case the user loses his key? Yes, this is another area of work, especially in the case of hardware or cold wallets. Uh, if the wallet is lost, for example, one may not be able to recover their key, which is why the wallets are not very popular. Not only are they expensive, but one can lose all of their cryptocurrency if they lost the key. So backup is one area for cold wallets to be worked upon, but for online wallets, this problem is not so big because uh, let's say, for example, you lose net banking credentials, right? You can restore it by speaking to the bank. In a very similar fashion, you are able to speak to the platform and restore access in the case of online keys.
Okay, so I think we can end our expert talk here today. So, to all the participants, don't forget to keep the momentum going by participating in our upcoming sessions and activities. We will have one more expert talk tomorrow. So, keep a lookout on the WhatsApp group and your student groups as well. And we can close the session today. So, thank you for joining us and best of luck with your uh, participation in the hackathon. So, yeah,
Thank you, Aditya. Thank you for the opportunity once again, and thank you all for your patient listening. And hope to make sure that there is something that you take away from this session.
sure, sure. Thanks again for willing to take this talk. I am sure that a lot of people have learned something they didn't know before.
Thank you.
Okay, I think we have done. Okay, I will be ending the session now.